If you want to go deeper in your understanding of how we account for property, plant and equipment using the revaluation model, this video will help you look at how we value property, plant and equipment after we have initially recorded it at cost, so that you will have a better grip on what the accounts can tell us about what is really going on in our firms. If a firm uses the revaluation model for a class of property, plant and equipment, as Ryman Healthcare does for its freehold land and buildings, then revaluations shall be made with sufficient regularity to ensure that the carrying amount does not differ materially from that which would be determined using fair value at the end of the reporting period. When using the revaluation model, it is a question of judgment for a firm as to how frequently it revalues items of property, plant and equipment. If, as a result of a revaluation, the carrying amount of an item of property, plant and equipment is increased, this increase in value is included in other comprehensive income and transferred directly to an asset revaluation reserve. It is not included in a firm's profit and loss for the period. Unlike upward revaluations, downward revaluations for an item of property, plant and equipment are generally included in a firm's profit and loss for a period, and then transferred to retained earnings as part of equity. Whether we use the cost or revaluation models, both require us to depreciate and to also identify impairments of items of property, plant and equipment. We looked at depreciation in the video Property, Plant and Equipment. As well as depreciation, we also need to determine in each period whether an item of property, plant and equipment is impaired. To do this, we apply AASB 136 impairment of assets. A firm needs to ensure its assets, including property, plant and equipment, are carried at no more than their recoverable amount. Recoverable amount is the higher of an asset's fair value less cost to sell and its value in use. Recoverable amount is an important concept in accounting and in valuing assets such as property, plant and equipment. If an asset is included in a firm's accounts at more than its recoverable amount, the asset is described as impaired. And AASB 136 para 6 requires our firm to recognise an impairment loss. We will look in more detail at determining whether an asset, such as property, plant and equipment, is impaired in Act 1906-2 Intermediate Financial Accounting. Watch this space. For further information on how we account for property, plant and equipment, go back to Chapter 5, Sections 5.2 and 5.3 in the study guide, and also review the Property, Plant and Equipment weekly questions. Also answer, write and rate questions on property, plant and equipment in Peerwise.